Good Sunday morning on Join the Dots. Recorded Friday, so again I won't be up to date with the very end of the market. If things happen on Friday, I won't see them. Okay, not at this point. So right, let's lead into, I left you yesterday with a part of what Greg Mannarino saw, clear as day in the banking system, that others are just not talking about. And that's the beauty of having an analyst like Greg, like Eurodollar University, like all these ones I bring you. They dig, because what you see on Bloomberg or CNBC is what they want you to see. It is not the truth. Okay, so we lead in, first of all, article on Goldman Sachs executive, Lloyd Blankfein, who was in charge when we had the 2008-9 crisis. And he traded through that, obviously, and they were bailed out, weren't they, by Warren Buffett. In fact, Goldman Sachs were bailed out by Warren Buffett at that time. And he says the US economy may be close to a crisis. Forget the word may, okay? He doesn't say crisis and US economy in the same sentence unless it's true. Otherwise, he could be blamed. So he says the word may. No, it means it's there. He knows it's there. We know it's there because we know the numbers from Greg yesterday. We talked about how many losses there are on the balance sheets, and we talked about how many trillions of losses there are in derivatives, which we can't even see. JP Morgan, 50 trillion of derivatives. Okay, now what I'm seeing, and one of the things that Goldman Sachs talk about, is private credit. That is the sexiest topic in the market, so it's the most dangerous. Sexy equals dangerous in financial markets. Okay, like we saw in, say, buying shares in Moderna in 21, 420, they're now 24, maybe 25. Or Pfizer at 60, now 25. Yeah, sexy is dangerous all the time because the public only rush in when it is so sexy that the big boys take that chance to get out, leaving the public holding the falling baby. Just the way it is. Okay, the second one, the biggest payroll revision in history. Remember that number, 9/11? I think that's spooky. 911,000 this week. I think that's spooky. And the third one was inflation, 2.9%. And the jobless numbers rose to a 4-year high. Stagflation. I've said it so many times. Inflation will rise, jobs will fall. Stagflation, the worst of all outcomes. And the outcome that says, like Ray Dalio says, be safe in gold, or in gold we trust. Stagflation, wicked. So I looked at the markets, and this is where most people get confused, understandably. What did the markets do when the job numbers came out at the worst in 4 years, with inflation the worst for ages, 0.4 in a month? Dow was up 1.04, S&P was up 0.55, and the Nasdaq up 0.38. Because the market's anticipating all the job cuts that are coming. Oh, hold on, job cuts, yes, cost cutting. And lower rates. But what do lower rates mean? They mean we're in crisis. It's not a good thing. You don't get lower rates in a boom, do you? You get higher rates. It's so easy. It's so easy if you think through the noise. The noise created by CNBC, Bloomberg, FT, Wall Street Journal. Noise. Okay? So let's go back to Greg's piece. I've given you a few intros into it there. So what does Greg say? He says, unrealised losses aren't just trillions in bonds, they are hundreds of trillions in derivatives. The system isn't just wounded, it's mortally broken. Now those two words tell you exactly what I've been telling you. We have to have a reset. It is mortally broken. It's not limping, it's on its back, 4 legs up in the air with rigor mortis. It's broken. So we need a new system. What do the banks say? What's the spin that comes out of CNBC and Bloomberg? It's fine as long as they hold to maturity. Liquidity facilities are in place. What, for trillions? Liquidity facilities in place. Stress test shows strength. You end up laughing because it's just so ridiculous. It's just so ridiculous. Translation of those saving graces. Stall, delay, distract. Try to buy enough time to use a cratering economy as an excuse to cut rates dramatically. What happens when you cut rates into inflation? More inflation. It's not difficult. Supply chains being disrupted all over the world. Tariffs everywhere. Ugh, it's so easy. Greg goes on. The mechanism acts as a temporary backdoor bailout by the banks. Of the banks, not by the banks. They don't bail out anyone. They get bailed out. Occupy Wall Street. Remember. So it's a temporary backdoor bailout of the banks, while leaving the general public left holding the bag. Yes, you're going to hold the bag. You always hold the bag. Remember 089, remember it. Who lost and who didn't have a problem afterwards? Banks. No amount of rate cuts, currency devaluation, or even planetary debt expansion can bail out the entire system. No, it can't. Not with these numbers. No, it can't. So as Greg says, and he calls his people lions because he calls them a pride of lions, their losses don't just vanish. They either get refinanced, Fed, Treasury steps in with massive QE support, gold, silver, or they get restructured with quiet bailouts, special facilities, or, and this is the worst case, you get a haircut. Investors, depositors take losses. This is coming. This is too big to be funded by the system itself. There has to be a bail-in of investors and depositors. Remember, you do have, in all countries, there's normally a limit which the government guarantees for your deposits in each bank. I know in the UK it's £85,000. Each bank will guarantee, or the government will guarantee each bank, each depositor at each bank with £85,000. Any more than that, you're at risk. So spread it. Anyone watching this who has, say, 300,000, you need to be in 4 banks, 85 in each. Okay? Because like Cyprus in 09 or 11, bail-ins are coming. Okay? None of these paths, says Greg, equal stability. All of them prove the system is broken. The entire financial sector is completely zombified, walking only because the Fed props it up. A terrible moment of reckoning is coming. Bottom line, the credit system is already completely and utterly insolvent. Every bank balance sheet is a fiction propped up by accounting rules and fake liquidity. Could be like the BLS bullshit jobs data, couldn't it? What does he call it? Accounting rules and fake liquidity. Yeah, everything's fake out there. The matrix is giving you the deflection, distraction. It's not telling you the truth. Bloomberg, look at those 3 I said yesterday. None of them were true. All quoted on Bloomberg. None of them were true. Really? They make that many mistakes in 2 days? I don't think so. Okay, so there's going to be more emergency facilities, more stealth QE, more narrative management control, which are all signs of crisis, not recovery. So then we go back to what do you do in a crisis? And we go back to Ray Dalio, and we go back to anyone who thinks about this. You should have a much higher proportion of gold and silver in your portfolio. You should have had it anyway, because as we proved the other day, since 1971, gold has outperformed the S&P with all dividends reinvested. Yes, it has. Yes, it has. Okay, no matter what your financial advisor tells you. Yes, it has. And he hasn't a clue anyway, because he's programmed. He's told what to tell you. He has a sales pitch. That's all he has is a sales pitch. But it's approved by the system so that he can't be sued. But gold has outperformed every single index. So easy. You just do a bit of research. You just dig and dig and dig and dig and dig. So this is where we are. Ray Dalio says it, 15 to 20% should be your gold and silver, precious metals within your portfolio. I would doubt that more than 5% of the people I'm talking to in this video have even more than 5% gold and silver. I would doubt that. And Ray Dalio, who I think is one of the soundest people out there, says 15 to 20%. So there we go. Thank you very much. I hope you've enjoyed today's show. And we'll be back Monday or Tuesday. I may take a day off, but we'll be back. And I'll catch up on the week's figures. Obviously, the saddest moment this week was the death of Charlie Kirk. I think he was certainly a candidate to become President of the United States in two or three more elections. A great shame. And just another symptom of this evil world that's out there. Because people are saying it was a random shot. Come on, it was 200 meters and it hit him in the neck. This is evil. We're up against this as well. So on top of all that financial stress, we've got ideological threats. We've got threats from everywhere. So rest in peace, Charlie, and we'll be back tomorrow. Thank you.